Tesla has had a pretty rough 2019 as a stock here, but going into 2020, things may be looking up for this company. One of the biggest catalysts around the corner is the Gigafactory 3 that's coming out in China, and today we'll be discussing some progress on this factory that any Tesla investor should be aware of. If you enjoy these Tesla videos, make sure to drop a huge like down below. 300 likes on this video and we'll continue coverage of Tesla on this channel. So we did get some news in the last week or so around the progress of the Gigafactory in China here, Gigafactory 3. And sources say that it is set to start production this month. However, there is some reports stating that production may not ramp up as quickly as initially expected, and this could be bad for two reasons. Remember that most analysts that cover Tesla stock are very short-term thinking, and as a result, they're going to be looking at what the stock is capable of, what the company is capable of in the next year or so. This means that any news or changes or anything out there that affects the company in the short term will most definitely impact the stock price. So what I want to actually discuss is two situations here where, if things work out, could set up Tesla stock for a massive run in 2020. However, if things don't go according to plan, it could actually set up Tesla for another rough year ahead. So the first thing being watched closely by these analysts is around their production number in China. China is seen as a huge market for Tesla, and this is critical because it presents a massive opportunity for the company. The country is moving more and more towards an EV future, and Tesla is actually the only US car manufacturer allowed to operate independently in China, and their cars are in big demand in the country. However, the way it stands right now today, before this factory is opened up, is that anyone that wants to purchase a car from Tesla that lives in China will need to import that car, and as a result, pay huge fees for it. Now, because of this, the average person there cannot afford a Tesla, and even the basic Model 3s are kind of priced to a more premium price due to those extra taxes and import charges that are applied to that order. And of course, for any company really with their product to really succeed and reach the masses, it needs to appeal to the middle class. It needs to be affordable to the middle class. So that's something that analysts are really putting a huge focus on here. And the second big thing that analysts and investors also are looking very closely here at the company for is their guidance for the number of vehicles that they will be delivering in 2019. So Tesla previously set a guidance number of around 360,000 to 400,000 vehicles delivered by the end of 2019. They set this goal earlier this year, and Musk is confident that the company will surpass this. They're pushing as many cars as possible, and they just had another record quarter of around 97,000 deliveries in Q3, and this is before the China factory has even opened up. This brings their total number of cars delivered in 2019 to around 255,000 deliveries. And this set another huge milestone for the company because now in the first 6 months of this year, they've already surpassed the total number of deliveries that they had in all of 2018. So this is going to be another record year for the company. However, as we reach the end of 2019, all eyes will be set on that delivery guidance to see if the company can surpass it. As it stands today, the company is actually around 105,000 deliveries below the low end of their guidance. So that's going to be a number that's going to be critical for both analysts and investors in the next quarter. So the question, of course, to ask is, as an investor, as an analyst, is Tesla going to meet these expectations, or even better, exceed these expectations? And if so, what is their plan to actually achieving that? Well, the way I see it is that these two things we just discussed is why the Tesla Gigafactory is so important for the company right now. So like we said, right now Tesla is selling cars to Chinese citizens. However, because of the large import fees and taxes, many people there cannot afford these cars. Well, once the Gigafactory opens up and they're able to produce these cars in China itself, that's going to bring down fees substantially, and the middle class will be able to afford these cars. This is of course going to set massive numbers, in my opinion, in sales for Tesla, and definitely help contribute to a record quarter in the company. In my opinion, it's quite possible here that this factor alone will help Tesla achieve their goals for guidance numbers in 2019. And on top of this, they also have expanded to Europe recently, so demand there, of course, is picking up as well. So pretty much across the globe here, you see demand for Tesla just ramping up month over month, quarter over quarter, year over year. And that's actually a very good problem to have because it shows that Tesla is creating a product that people want, and the company isn't able to fulfill those orders as quickly as customers are placing those orders. So that's a really good problem to have in my opinion. Now this new Gigafactory is actually expected to produce around 1,000 Model 3s a week going into 2020. So if we assume that there's 11 weeks left in the year, this means that 11,000 additional cars in Q4 will be delivered compared to Q3. So that means if Tesla can meet the same demand that they had in Q3, which is around 97,000 cars, and if they can add on another 11,000 from this new Gigafactory, that will set them up for delivery numbers of around 108,000 cars in Q4, which will actually help them beat the low end of their guidance there. However, one good thing is that the 1,000 cars a week is actually on the lower end of their guidance. They ideally want to hit 2,000 cars a week by the end of 2019. And if that happens, we actually may have a shot here of this company surpassing the higher end of their guidance. And if that happens, I bet that we're pretty much set up for a pretty strong rally in 2020. So really, as a Tesla shareholder, it's a very exciting time here in the company because it really poses a huge opportunity. This is not something that comes around that often, and I think that a lot of investors are starting to realize this as the stock kind of hovers around the $200-ish range. This hasn't really been a great year for Tesla overall in terms of the stock price. However, their fundamentals are still the strongest that they've ever been. They're setting record delivery numbers, they have Gigafactory 3 opening soon, and they have established themselves as the #1 EV player worldwide. The company currently sits at around a $42 billion valuation while bringing in a trailing 12 months revenue of around $25 billion. So we're trading at less than 2 times sales here, which in my opinion is low for a growth company. Shopify, for example, has around $1.3 billion in revenue with around a $36 billion market cap. And Roku brings in around $900 million in revenue with around a $12.4 billion market cap. And although these are not companies that are in the same sector or competitors to Tesla, I do want to show you that the market typically prices growth stocks at a very rich valuation, but they're not doing that with Tesla here because they're afraid of the auto industry, they're afraid of sales declining if we do hit a recession. But in my opinion, Tesla is much more of a tech company with its AI and all that stuff than it is a pure auto company. So as a result, I strongly believe that they should be valued much higher than what they currently are at. Also, I'll be keeping a very close eye here on the free cash flow for Tesla next quarter because this will actually show us how much money they have bringing in and if they can actually turn 2019 into a positive year. Free cash flow is generally a great metric to look at for the health of a business while they're operating to see how much money they can bring in that is usable for things like reinvestments or dividends. And the higher the free cash flow is, the healthier the business is. So I'm personally excited to see Tesla reveal their next earnings on October 25th. It's definitely going to be something that a lot of investors tune into because they want to see if Elon Musk is still as confident of their delivery goals for 2019. I think that if we have a combination of a strong earnings report for Q3 and we have a strong outlook for Q4 with delivery numbers and all that stuff, then we're going to most likely see a very strong rally in the stock sometime in 2020. The market has been suppressing this as much as it can here in 2019. Stock even hitting as low as $180 per share at one point. But in my opinion, I think the darkest days for Tesla are pretty much behind them. And we have a lot of positive things to look for in this company going into the next year. So I want you to let me know in the comment section down below if you think that Tesla will actually beat their guidance for delivery numbers here in 2019. I personally believe they're actually going to come in somewhere in the range between their low end and high end of guidance. I don't necessarily think they're going to beat 400,000 deliveries in 2019, but I think they can come pretty close to that, which in my opinion will still be positive news for the company. All I can really say is that if you're a Tesla bear, do not underestimate the power of the new Gigafactory in China, because that alone could set this company up to be a much, much more profitable company moving forward. Thank you so much for watching, guys. Hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one. Peace.